Alright y'all, today I want to talk about the things I wish I knew before I started trading. Because if you are new to this, if you internalize what I'm about to tell you in this video, you will be off on the right foot. You will be ahead of 95% of traders. Because most of trading is not about technical analysis. It's not about entering and exiting trades. It's about the things that go into planning your trades, and it's about the psychology and the mindset that you have as you are actually doing this on a day-to-day basis. And so today I want to talk about the 4 major things you need to do that you can have all your ducks in a row, all your geese in a gander, before you actually start doing this full-time or part-time or whatever. So make sure to like the video, guys. Make sure to subscribe to the channel. The Jason Casper like button is absolutely mega bullish right now. Make sure to FOMO in. I usually don't give trade setups on YouTube videos, but this was just too good to pass down. You only have to risk 100% of your capital in order to gain this tiny little gain. So make sure to like the video, guys. Subscribe and share this video everywhere. Thank you. All right, let's get into it. Number 1, you need to learn the basics about trading. Now, this might seem kind of dumb. Why would I even put this here? But you would be surprised at how many people jump into trading the way they jump into so many other things in life. Now, personally for me, I am the type of guy where I learn by doing. If I have to put something together, I'm not going to read the instruction manual. Instead, I'm going to just start putting it together until I figure it out, right? And it's the same with a lot of other things that I do in life. I like to learn by doing. And if I make a mistake along the way, I learn from that mistake and carry on. Now, trading is not one of those things where you can learn by doing. You will not. I guarantee you will not learn how to trade by just trading. One of 2 things is going to happen. Either you are going to get super lucky on your first few trades and make a whole bunch of money and then lose it all really quick, or you're immediately going to lose a whole bunch of money really quick. The reason is because when you are trading, there are technical things you need to know, and then there are other things that you need to have down psychologically, or at least on a piece of paper somewhere, so that you know what you are doing, so that you always have a plan when to enter, when to exit. If you do not do this, you will get wrecked. You will find yourself in a position where you don't know what to do. And if you find yourself in a position where you do not know what to do, that is called gambling. If you always know what to do, if you always know when to get out of a losing trade, when to enter, when to exit, where to set your stop loss, where to take profit, then you are setting yourself up for success. Now, in order to learn the basics, you need to understand basic technical analysis. Now, what is technical analysis? Technical analysis is analyzing a chart in order to find key areas of support, resistance, to determine what price is going to do next. For example, this morning, I was able to take a long trade from right here because we came down to this level, the previous day value area low, which is also a naked daily point of control. Now, if you don't know what those things are, well, you need to learn, because look at what happened when price came down here. We were able to get into a trade. We were actually looking at the level in advance in the VIP Discord, that exact level, naked daily point of control, previous day value area low, and take the trade right from there because we were ready and prepared, okay? Most people, when price is dumping down like this, psychologically, if they don't know that it's an area of support, they don't know what they're looking for, they will either short here and get totally wrecked, or they will do nothing here and miss this big pump, right? So you need to learn some basic TA. If you don't know, you can check out my course, jasoncaspertrading.com. This course will give you the knowledge and the skills you need to become a confident, profitable trader, because it gives you a step-by-step process. Everything you need to know from the time you sit down at a chart to the time you're taking profit, exactly what to do and in what order, so that you always have a plan regardless of what the price is doing. Okay, you'll be able to feel confident in your entries. You will know how to not trade with emotion, risk management, mindset. We actually give you 5 strategies that work. A lot of courses, they'd say, oh, I'm not going to give you my strategy. I want you to learn your own. Well, I give you my strategies because I know if you have a starting point, then you can build off of it. But if you have no starting point, it'll suck, right? There's currently a 30% discount in the description. You can check out these success stories here. Check it out, guys. We go through basic technical analysis to more advanced TA, how to use the indicators to get in and out of trades, trading strategies, mindset and risk management. Check it out, guys. 30% discount in the description of the video. Okay, now, the second thing you need to do after you understand basic technical analysis is develop and test an easy strategy. A lot of people, when they start trading, they feel overwhelmed, especially if they're in a Discord group where everybody is trading on different time frames. You have some people swing trading, some people scalping, and people are contradicting each other all over the place. Because the truth is, you can long and short at the same time and be profitable doing both. For example, literally right now, I am in multiple long positions and multiple short positions at the same time, and they are all in profit. And so depending on from what perspective you're looking at the market and what time frame, you could be bullish or bearish and be right. And this is difficult for a lot of people to understand. So you need to develop and test an easy strategy. Now, this could be a strategy from my course. This could be a strategy that you come up with by yourself or from another course or anywhere. But you need to have it and you need to stick to it. Okay? For example, a great strategy that I always recommend for beginners, always, is 12-minute divergences at key levels. Both of the trades that I got into today, both the long from down here and the short from here, gave the setup literally in advance in my VIP Discord, looking to short from that level 44947 because we were getting bearish divergences on the 12-minute time frame. Entered into the short TP1, still in the short, guys. Happened exactly like we wanted to because I was sticking to a very easy strategy, which is 12-minute divergences at key levels of support and resistance. So for me, right here, for the short, we had a bearish divergence. Price was making a higher high. Momentum made a lower high on the 12-minute time frame as money flow came down. That is a short signal. Boom. For the long, same thing. Price was making a lower low right down to our level as momentum was making a higher low on the 12-minute time frame. Boom, for our long position. If I just have this one strategy only, okay, today alone, I made over 200% on my margin, okay? And depending on your position size and your leverage and all that, you could potentially be making easily 1 to 5% on your whole account with just these two trades, okay? So my point is, you don't have to be over trading. You don't have to be doing all this crazy things, Elliott wave counts and fib time. Yeah, that's great stuff eventually, but you need to have a simple, basic strategy and stick with it. And I find that the simpler, the better, okay? And so once you have this strategy down, let's say it is the 12-minute divergence at the key levels, stick to this for a while. Stick to this strategy for a while. So many new traders I see, they want to take trades that they're not ready to take. I guarantee if you stick to the 12-minute divergence at key level strategy, you will have success. Let's just take a look at the past few days, okay? We had price making a higher high to a key level, which was this daily level, as momentum was making a lower high. Boom, we can short it down, okay? Then we come over here and we see price is making a lower low as momentum is making a higher low. Boom, we long it up right here. We come up here, price is making a higher high, momentum lower high. Boom, we short it down right here. These are three great trades. This one right here, 2.5%. This one right here had the potential to make about 3%, let's say 3.5%. And then the short, which I'm currently still in right here, you know, a 2.5% move, okay? These are great day trades that you could take. Remember, this is the 12-minute time frame here, so this first short, you know, you would have stayed in there for like, you know, about like 3-4 hours there. And so these aren't like super fast scalps. These are like day trades that you would take. And if you just stick to this one strategy, you will be profitable because you have it down. It's very easy. And you have a plan in advance. If you start to think to yourself, well, I see all these other people scalping on the 1-minute time frame, or I see all these people doing harmonics and Elliott wave counts to enter into all these trades. Like some people literally scalp like in day trade with Elliott wave. And that's great for them. But for you, if you're new to this, don't overcomplicate things. Keep it super simple and stick to that strategy for a while. Focus on getting better at that, and then you can build upon what you already have. Which kind of leads me to my second point. Build upon what you already have. Don't start over. I have seen so many people start trading and they start with one strategy. Let's say they're using market Cipher and support and resistance. Like that's what I do. And then they take a few losses. So they're like, you know what? That can't be the way for me. I'm going to try something else. And then they start trying to trade exclusively TPO. Exclusively TPO. And then they get wrecked like that. And they're like, you know what? This can't be it either, right? This can't be it either. And so then they start to, let's say they start to go in a totally different direction, and they start trading based only on like liquidity and things of that nature. They are all over the place. They are not going to get good at anything because they are focusing on too many things at one time. You need to build on what you already have. Do not start over. If you find yourself taking losses, go back to step one. Develop and test an easy, simple strategy and stick to that for a while. Even if you take a few losses, you don't know if that strategy is good or not for a number of reasons. Number one, if you're new at trading, you might suck at entering and exiting. It takes some time to actually learn how to get on an exchange, enter into trades, set your take profits, set your stop loss, enter at the right time. That takes some experience. Okay, so your strategy might not suck. You just might need to work into it a little bit. Okay, and once you have this basic strategy that you can go back and back test, right? Like we can go back and back test this 12-minute strategy pretty easily. I mean, really, there are just so many of these entries here, and of course they're not going to come up every day, guys. They're absolutely not going to come up every day. But when they do come up, they are very, very profitable. They're super profitable. Here's one right here. You could have literally longed the exact bottom using the 12-minute divergence strategy, and you could still be in this trade right now, guys. You could still be in this trade right now, up 22%. Or for me, you know, one of the best trades I've ever taken in my life, right here. Let's see if I can find it. Yeah, right here. Longed Bitcoin from 31.1, which was down here. Okay, all the way down here. Literally, look at this, right? I mean, if we just zoom in here, just using this basic strategy, no need to even overcomplicate things. There literally was a level, I kid you not, right here. Is this the one? Hang on, no, I have to go back even farther. I have to go back even farther. I guess it was at the end of June. Okay, right here. There was literally a level. This is the level, actually. This white line is the level. If we take a look at what was happening right here, what do we see? Literally, price, lower low to our level of support, 12-minute time frame, bullish divergence. Okay, literally got into long the exact bottom with this strategy. Okay, this is why you cannot overcomplicate things, and you need to stick to the basics and build upon what you have. Once you have this down, okay, then you can try other things. You can try other things. At first, clear the noise. Someone doing Elliott waves, great for them. You can put that on the shelf. Wait until you have down what you have down, and you're doing well with what you have, and then maybe you can add that. Okay, if somebody doing great with TPO charts, good for them. Maybe you can start to dabble into that. But the point is, you need to add to what you already have, and try things. And for me, here's an example of adding on to what I already have. So for me, I really like using support and resistance with divergences on market Cipher B. Now, some people trade exclusively TPO charts. What are TPO charts? TPO charts are time price opportunity charts, and they look a little something like this. Okay, now normal, if you're new to trading, this looks super complicated, but what can you do with a chart like this. Now, a lot of people would use these charts to find discrepancies in volume and time. If you don't understand that, that's fine. But on a chart like this, there are these things called single prints. And single prints can be levels of support and resistance that can offer very, very nice bounces. And so for me, I can use this chart right here and tell myself, okay, if price comes down to this level of 42,837, this is now a level of support, and I can look for my divergences here to get into a trade. And so I'm building upon what I already have. I'm not trying to trade TPO exclusively, as some people do. I'm just using this chart to get more information that will help me do what I'm already doing, and I'm building upon what I already have. If I come across something like, for example, Elliott Wave, I see the benefit of understanding Elliott Wave. But for me personally, I'm just not there yet. I have not added that onto my trading strategy yet. It's on the shelf. It's something that I see the value in, and I'm going to get into that eventually and add it onto what I already do. And so what you need to do is, at first, clear the noise. Focus on what you're already good at. Number 2, try new things out and build upon what you already have. And number 3, if you come across something and you see people doing well with it, put it on the shelf. Try it out. If you don't like it at first, you could put it on the shelf and say, I don't like this right now, but maybe later I will. Or you could say, you know what, I don't like this and I don't think I'll ever like it. And so you just never even come back to it because it doesn't fit with what you've already built. Build upon what you already have. And then that leads me to number 3, guys. This is super important. Stay consistent and patient. Okay, you need to stick to your strategy. People get eager to always be in a trade, and that's what wrecks the majority of people, I would say. People, instead of waiting for those good setups, instead of waiting, and it's very rare, I would say, that you literally get 2 trades within an hour like I did this morning, the long and the short. Instead of waiting for their confirmations, people, they say, oh, price is going down, let's short. Or they say, oh, price is going up, let's long. And as soon as they do that and they don't have a reason for entering that trade, they are going to get wrecked because now they're in a trade without a plan. They don't know why they entered the trade. They don't know where they're going to take profit. They don't know where their stop loss should be. And that's how people lose money. I have found when I first started trading, you could take 5 trades perfectly according to your plan and then get totally wrecked, flopping and groping by chasing price and entering stupid trades that you should not be entering instead of just waiting for those good setups. This morning, okay, I made a post in the VIP Discord. By the way, you can get into the VIP Discord by going to patreon.com/Jason Casper. But here was my post this morning. I took the long trade this morning, and I said after 2 days of not being in a long, I finally got into a good one. I bring this up because a lot of people get wrecked by chasing price and not waiting for the trades to come to them, right? You got to wait for the setups to come to you. I missed the good long on Sunday night, which I did. I missed a really good opportunity on Sunday night, and I totally missed out on this whole entire pump up, right? I totally missed out on this massive pump to the upside. Why? Because I was asleep when price came to the daily level. I did take a long from right here and got stopped out in my entry after take profit 1 was hit. But I didn't get into this really good long, and I never found an opportunity to get into a long on this whole way up because I'm not going to FOMO long even if price is pumping like this. I'm not going to do it. I'm going to wait for a good setup. Okay? And what I did was I waited patiently until price came to one of my levels with my confirmations. And I said, patience pays off, y'all. There will always be another trade. Don't ever FOMO into a position. If price is moving and you missed the move, go to the charts and plan your next move. Yes, you're not going to catch every move. Or should I say, no, you're not going to catch every move. You are not going to catch every move. You are not. You might be asleep. You might be away. It doesn't matter. The point is, we're doing this for one purpose only, to make money consistently over time. The only way to do that is to stick to your dang strategy and be patient and wait for those trades to come to you. People that don't wait get wrecked, even if they're good traders. I have seen good traders get wrecked. I've seen really good traders get wrecked because in a moment of weakness, they were taking trades they shouldn't have been taking. And then they revenge traded against the loss they took. And now they have 2 losses and then 3. And they're like, all right, I need to stop. Some people don't stop. And then the next part of this is risk management. Okay, risk management is super important. We go into it in the course. There's a whole section on risk management here at the bottom. And, you know, the purpose of risk management is so that you do not risk more capital than you can afford to risk. Now, I use these words very selectively. Risk more capital than you can afford to risk. If you are losing more than 1 to 3% of your total trading account per trade, you are setting yourself up for losing everything. Now, this is taking for granted that you already are sticking to your dang strategy, okay? Because if you're not sticking to your dang strategy, risk management is not going to help you. If you are entering trades you should not be entering, risk management is not going to help you because those losses will stack up quick. But if you are sticking to your strategy that you know works, and you're only risking 1 to 3% of your account, we can do this in different ways by utilizing leverage. We can do this by changing our position size, using our stop loss, risk to reward ratios, and things of that nature. Again, the course goes into it, 30% discount in the description. But the problem is people get lazy, and that's when they get wrecked. So the most dangerous time, actually, I've noticed in my own personal trading career of taking losses is when I'm on a huge winning streak. In fact, I remember not too long ago, I was trading like in a very, very profitable time and a huge winning streak. Back in this, let's see if I can find it. Yeah, back in this range, guys. Back in this range. It was so juicy, okay? I literally longed from here, shorted from here. I took a long from right here, a short from right here. I took a long from right here, and I took a massive short from right here. It was so juicy. I stayed in it for a really long time. I don't think I closed that short until we started to, until we put in this higher high right here. That's actually when I closed out that short, but I took profits down at the low when I entered this long. But I closed it out here. That was whatever. It doesn't matter why I did it. But here's the thing. I took a long from right here. I took a long from right here, and I got absolutely wrecked. Now, here's the thing. If I had not been using good risk management, I think I actually took like a 2% loss on my entire account from this long because I thought it was gonna. I thought it was gonna be a good long. Okay. I really thought we were going to come back up to the high of the range, potentially even break out of it. Now, if I had not been using good risk management, let's say I took the long here, the short here, the long here, the short here, the long here, and I'm like, you know what? I am leaving so many gains on the table by using responsibly sized positions, right? I could be making way more money on these trades, and they're just so easy because it feels easy when you're in that groove. And then I take this short. It's like, man, you know what? Let me just put more money than I should on the trade, okay? So then you're risking like 10, 15, 25% of your entire account on this trade. You enter the trade. It starts out good, right? It did start out a little good. It was in profit. And then, boom, we come back down and it's in the red. And then we come up a little bit more. And you're like, oh, all right, we're coming up. And let's say that you add, now you start flopping and groping. When you see that trade in the red, now you can start playing psychological games with yourself where either you're going to take a huge loss, much bigger than you should, or now you might even do something worse, like add more to the position to lower your entry, lower your leverage so that you don't get liquidated, and the next thing you know, you're taking a massive loss because you have not stuck to your risk management principles, and all the money you spent building up over time over the course of this entire, from December 4th all the way to the end, the whole month of gains is wiped out and more in a single trade because you got lazy on your risk management. If you stick to your strategy and you stick to your risk management, it is mathematically impossible that you will lose money. At the very least, if you suck at this, you'll break even. And of course, guys, this is not financial advice. I don't even trade real money. I'm a paper trader only. I'm just a guy on the internet with a Pikachu hat, crooked glasses, open mouth. I do not advocate trading real money because the goal of life and the purpose of human existence is to avoid all risks and make life as easy and cushy as possible. For example, if there's a possibility that you might become ill by some kind of sickness, then instead of taking that risk, instead you should totally stop living life. You should lock yourself in your house. You should eat lots of processed food, watch a whole bunch of mediocre Netflix shows, close down your business, and if you have to leave the house for any reason, make sure you cover every single opening into your body to prevent anything from crawling into there, right? That's the goal of life, to avoid risk, okay? Quit your job, don't worry about it. The government will take care of you. Same with trading. There's a risk you could lose money. Therefore, I do not advocate trading real money. I exclusively fake trade. I'm a fake trader, and you should be a fake trader too. Not financial advice. But mathematically, guys, if you are sticking to this, your fake trading account at the very least will break even, okay? Your fake trading account. And that leads me to number 4, stay realistic. All right, especially new traders, they come into this and they're looking for that magic strategy. They're looking for that magic indicator that's going to tell them the exact top and the exact bottom. The truth is, guys, there are really great indicators out there. Some are better, some are worse. At the end of the day, in my opinion, the trader is the indicator is irrelevant. The most important thing is strategy and risk management. Then the indicator will help you if you have those things down. For me, Market Cipher, the best indicator I've ever used. This tool, Market Cipher, has made me so much fake money over the years because of the ability it has to tell you which direction the market is going to go at key levels of support and resistance. This is my favorite trading indicator, okay? But it's not magic. If you are new to trading and you just open up Market Cipher and you think you're going to be able to make a lot of money, you can if you stick to a strategy, right? Even the most basic strategy, the one CryptoFace teaches out of the box with Market Cipher, you have to stick to it. You can't just long every green dot and short every red dot. You have to have some kind of strategy, right? The basic strategy on Market Cipher is you want to see an anchor wave and a trigger wave, and you want to see money flow coming up, okay? So you would have taken a trade here, potentially taken a trade here. On the 4-hour time frame, very, very, very powerful signals. But if you're on the 1-minute time frame and you're just longing every dang green dot, you're absolutely going to get wrecked, right? You have to stick to a strategy. There's no magic indicator. Some are better than others. The second thing is you're not going to win every trade. You are not going to win every single trade. Losses happen as part of trading. Sometimes it's you, okay? The past 3 losses that I've taken, it was my fault. It's totally my fault. In hindsight, I didn't do this, okay? I didn't stick to my strategy. I wasn't waiting for my confirmations. I was overconfident and I took losses, okay? Sometimes it's because the market didn't go in your direction. Sometimes you can have your confirmations out of support to long and the market keeps dumping. It happens, right? When you get into the mindset that you have to win every trade, it's going to hinder you because when you start taking a loss or two, you are going to let that affect you emotionally and negatively instead of just saying, you know what, it's part of the game. Let me continue on doing what I'm doing, okay? And if there's one thing you take away from this video, it's this. These 3 things right here will equal your success. Strategy, risk management, and discipline equals success. I guarantee this. I can say this from personal experience. I know many other people who can say this from personal experience. You have to bite the bullet and say, I am going to do this and I'm going to do this right. I'm going to have a strategy. Doesn't even have to be the best one. That's what people don't get. You don't have to be the best dang trader in the world to be successful. You might not be able to make as much money in as short of a period of time as somebody who's scalping the 1 minute and swing trading and doing all this crazy stuff, but you'll still be able to make money over time, and that's what's important. So if you have some strategies and you're using good risk management and you're disciplined enough to wait for those setups to come to you and you're not chasing price and you're not forcing trades, you will have success. And what is success defined as? Number 1, success is defined as not losing money. If you are a break-even trader, you are ahead of the game. You are way ahead of 90% of traders out there. That is step number 1 to success. Step number 2 is making money at all. If you are making money at all over time, over the course of a week, a month, 2 months, 3 months, a year, you are better off than most traders. And so even if you're new, these 3 things are going to set you off on the right foot. If you grew your account by 10, 15% in a year, and it's your first year trading, simply because you learned some basic TA, had a basic strategy, stuck to your risk management and discipline principles, you are better off than 97, 99 or whatever it is % of traders that will ever trade. And so we need to start somewhere. And, you know, that's how I define success. Not losing money and making anything over time. And the better you get at this, the more you will make over time, because you will learn more strategies. You will be able to enter more trades. You will learn how to and when to take profits and things of that nature. And this is something that I believe anybody can do. Now, again, if you want to learn a comprehensive way I do this, you could check out the course at jasoncaspertraining.com, 30% discount. Also, if you do want to get into the VIP Discord, where we post daily technical analysis, all the levels that I'm looking to take trades, as well as if I see a good trade setup, I will post that thing in advance in here. And you know, this is not signals, right? But it's non-financial information, non-financial advice, paper trading, chart information. Okay. So I hope you found this video helpful. If you did, make sure to like the video. Make sure to subscribe to the channel, guys. God bless everybody in the name of Jesus the Messiah, Yeshua the Messiah. I pray that each one of you listening to my voice right now is blessed in many ways. And I will see y'all in the next video. Peace.